Why does language shape retirement outcomes? This is important for everybody on here, whether you're 18 or 80. And there's a phenomenally good article in the Financial Times on exactly this point. Behavioral reframes, why language shapes retirement outcomes. What they're actually saying is that when we talk about wanting lower volatility, we're mistaking volatility and risk. Risk is what happens at the end of term. Okay, whether it's 10-year outlook or plan or 15, the risk of missing your goal if you needed, I don't know, £1 million in your pension or 2 million, whatever you needed. And we've got a bunch of free tools to help you plan. campaignforamillion.com/tools for those. campaignforamillion.com/tools. They're all free. You don't even need your email inputted, all right? People are mistaking risk of missing the goal with volatility, which is what happens on the pathway there. In the same way, you don't care what happens to your house price every day. And Warren Buffett beautifully put this example with house prices, that if you saw your house price drop 10% in a year, you wouldn't say, let's panic sell. You only need to worry about the risk of what might happen when it's time to sell, which might be in 10 years or 20 years. And you'd ask yourself, has fundamentally anything happened to our house? Is there subsidence? Is there a problem in the neighborhood? No, none of those things. So this must be noise. And house prices should rise with economic growth of the country as a whole, and maybe even the area that we're in. So trying to differentiate that permanent difference from a news item or a noise item on a week-to-week basis, which you'd ignore with your house, it's the same with the stock market. And it's that behavioral reframing, not understanding the difference between volatility and risk, why so many people's retirement outcomes, the Financial Times says, are failing them because they're targeting lower volatility through an IFA or a wealth manager, therefore getting lower growth and therefore more likely to be taking more risk of missing their end goal, whereas they should be going for growth. And as our free tools show, if you increase growth in your funds by even 1%, your outcomes over 10 years are phenomenally improved. Have a look at them on campaignforamillion.com/tools. Thanks.